Have you ever pondered why understanding debit and credit is fundamental to mastering the art of accounting? Hi, my name is Osman, and let's delve into the lecture on the foundation of accounting. Well, we're about to dive into the heart of these crucial accounting concepts. Imagine that you are standing in front of a giant old-fashioned ledger book. On your left, you have the debit column, and on your right, the credit column. These two columns are the backbone of accounting, a fundamental language that allows businesses to tell their financial story. Let's start with debit. Picture the word debit as a friendly greeter, welcoming assets, expenses, and dividend into your accounting records. When you debit an account, you're increasing its value. It's like adding more guests to a party. However, if you debit liabilities, equity, or revenue, it's the opposite. You're showing them the door, reducing their value. Now let's turn our attention to credit. Think of credit as the party planner who loves to invite liabilities, equity, revenue, and share capital. When you credit these accounts, you're boosting their value. But when it comes to assets and expenses, a credit will lessen their value. Remember, in the grand party of accounting, every transaction dances with at least two accounts. This dance is known as double entry accounting. One account gets debited and another gets credited. This ensures that the accounting equation, assets equals liabilities plus equity, always remains in perfect balance. Let's bring this to life with a few examples. Say a company purchases inventory on credit. The inventory, an asset, gets a debit invite, increasing its value. Meanwhile, accounts payable, a liability, gets a credit invite, also increasing its value. Or, consider when a company receives cash for services rendered. Cash, an asset, is debited, increasing its value, while service revenue is credited, also increasing its value. And finally, when a company pays rent expense, the rent expense gets a debit invite, increasing its value, while cash, an asset, is credited, reducing its value. By adhering to the rules of debit and credit, businesses can accurately record and track financial transactions, maintain proper financial records, and prepare financial statements. It's the rhythm of the financial world, dictating the flow of every penny that comes in and goes out. So there you have it, the essence of debit and credit in accounting. A simple yet powerful language that navigates the complex world of finance. Always remember, mastering these concepts is your ticket to understanding the fascinating narrative of any business's financial journey.